So we are here for another week. I'll be doing this review a little bit more sketchy, not sketchy, but a little bit more fast-paced, if I may say so, because it's my first time trying to record this, and I hope that the computer doesn't crash again and shut down. So midway, because it happened the last two sessions that I tried to review. So let's see if the first time is the charm. And yeah, I'm hoping that it will work. And it will not be a complete review like the other ones. Well, I can make it complete, but it's almost 20. So, well, I'm going to make it complete. I'm going to mention what I mentioned. It's already on my head, but that's it. So I mentioned that I was looking at this 6-month premium week consecutive encroachment. I will just be showing, and this is a bias for you guys if you want to, for me, if it's indeed correct or incorrect. I don't know, but that's my idea. I'm looking at the 6-month premium week consecutive encroachment. If the monthly drawn equity is reached to price draws into the monthly drawn equity and get a little bit energetic, then we may see these higher prices. Traded, which is also coupled with these opening and closing prices right here. That's also coupled with this busy eye in very uh, close proximity, if I may say so, and it's also in the premium from the from the previous year candlestick. So in 2023 high, 2023 low, and we have this on OTE. On the monthly, not monthly, 6 week. On the 6 week, I also noted this order block, so it's very close proximity to an order block. And if indeed price trades here and draws here, then I'll be looking for like a either a reversal or retracement. At this time, I can see either a reversal trading lower or a retracement, but because of 6 month, we have this busy, and if you look at 12 month, we have also this busy right here. So there's a chance that we might reach into the 2022, 2023 low, turtle swooping this low right here of the second half of 2023. So this is a very high likely POI which can create a retracement or a reversal. So I don't know for sure if it's going to be a reversal or a retracement, but I know that right here is a very high probability short in my opinion, and we are likely to, and it is a good time, especially time if it's 22 on February, to sell, and a good price as well. So that was the 6 weeks. Now on the 1 month, we have this also. This is a balanced price range. So if price trades here, then we are likely to see continuation lower and seeing this swing high be respected until a new until 2023 low is taken out. Now going to the weekly, I mentioned that I'm looking at higher prices again. Why am I looking at higher prices again? And I mentioned this all January that I'll be bullish because we have this order block which was disrespected, and I was looking to it at this candlestick right here on week one. We closed above it, so we are likely to see price continue on the upside, and that's also coupled with some fibs that are drawn on the daily chart, and that's basically it. On the weekly, and now going to the weekly DXY candlestick on itself. Let me just check one thing really fast. Okay, it's not overheating, but I don't know why the computer kept crashing, even not overheating. Just put this right here. Okay. So looking at the weekly candlestick, we may say that this week was a classic bullish candlestick, where we had the opening, a possible Tuesday low of the week slash reversal, and then price expanded on the upside, reaching into, and then we will want to see the low of the week create that reversal of the week, if I may say so, and price would expand on the upside into the monthly drawn equity, which sure this equalize. But If I go into the low time frames, into the 1 day, I can see that this week was not a very high probability week. This is coupled with me actually mentioning on my notepad that I was also looking for uh, also looking for some type of bad delivery. I wrote on the past Sunday that on the 1 day time frame, nothing clear for the weekly reversal slash low of the week. Safe to assume that the low of the week is going to be made on Monday and expecting higher in the first half. So we had the opposite of that. So that's a good thing to note that this week was an opposition of my idea where the first half was very slow and then second half really made that entire candlestick range, especially Friday, where you made the Friday low of the day and Friday high of the day, and those were the low of the week on Friday and the high of the week on Friday. Uh, that is also that is also coupled with the fact that the low of the week. So the low of the week was this. Sorry. Let me just. That is also coupled with the fact that we had a Passover week, which was the bridge between January 2024 and the February 2024. So this acted as a bridge, as a connection between the 2 months. And we had on Wednesday FOMC and on Friday NFP, which were the biggest event news on this weekly candlestick. So I'll be noting the entire weekly candlestick. So we have the weekly open, the weekly close, the weekly low on Friday, and the weekly high on Friday as well. With that, the first thing that I noticed is that on the first 2 days, on Monday and Tuesday, we had price not expanding, but accumulating a lot at the weekly open. And that for me was an indication. I can show you just for reference. I don't know when it was. It was here. I don't know, but there was a point in time of instead of this week, I think it was Tuesday, my recap on Tuesday, where I mentioned that I'll be waiting for the second weekly off. So what I mean by that, so we have the if we divide the time duration of this week into half, so we have first half, second half. The half of the candlestick is on the 12 hour, so I'll be jumping right on to the 12 hour, and I'll be showing you the halves and what I was expecting. So this was the first half from Monday 17 to Tuesday 19, which opens then the second half from Wednesday 7 and then ends at weekly close. So weekly open middle point is Wednesday 7 and then Wednesday 7 opens the so because the open and the close it's always the same thing. So the let me see this 7 this 18 this 19 opening price it's also on the Wednesday, which is for the Thursday candlestick, is also the Wednesday closing time. So because the candlestick works like this, so we have open, high, low, close. Then this close extends into then making the next candlestick. Alright. Then also this candlestick is also the next candlestick opening. It's always like that candlesticks works. But I mentioned I was looking. I said like, oh, we have equalize. We have pricing consolidating a lot on the weekly open, which indicates that we have seek and destroy conditions. What does it mean to consolidate on the weekly open? Choppy conditions and range conditions. And what that indicates you, it's pretty simple. There's a difference between a trending candlestick, which doesn't accumulate a lot. Let me just make the drawing correct, which doesn't accumulate a lot on the weekly open. So this is the days. We have like this trending candlestick on downside. This is a trending candlestick, where we have the opening price, and price after reversing this opening price then acts as a point of interest to continue. So it acts like as a balanced price range and creates the premium wick and then expands lower away from the premium wick. This is what it means to have a trending candlestick, a day trade, a classic ICT buy candle and a classic ICT by day. I think that's what's the daily templates I called. I don't know. But weekly candlestick that consolidated a lot is something a whole lot different. When we are above the weekly open and above an high, we then have a retracement to possibly make another high, and then we can see another price lower. And when we are lower below the weekly open, we retest it, and we can possibly trade back higher, and then you trade back lower, and then you trade back higher, and then back lower, always like that. This is not a shoppy, it's a range candlestick. That's the whole idea. It's like price Monday was higher, right? Then come back lower once again. Then went higher one more time. And then back lower one more time. Then another time higher. No, it was another time. Let me just make the drawing correctly. I'm sorry for not doing that correct. So weekly open, we go higher, we go lower, we go higher once more before going lower, then we go higher once more, then we go lower, then we go higher, and this is the type of candlestick that consolidates a lot on the weekly open. If I go into like a 4-hour chart, it's better seen, where you can see higher, above an eye, above the weekly open, immediately lower. Below the weekly open, immediately higher, a little bit higher. Now we are below the weekly open and below and low, immediately back higher, and that's same thing that happened on DXY, on EU. If I may say so, like we are higher on Wednesday, then we are back lower, then on this Wednesday low we traded back higher, so then we go back all lower. It's always this range, this style of a range, and you go higher and lows and highs and lows, and it's basically seek and destroy conditions. So you can't in these markets you can't call a top or a bottom. You have to simply trade the range and trust that the pattern and the seek and destroy will prevail than your logic or or your bias that you married and that you think that it's going to be in place, but it isn't. The law that many people call this Thursday law of the week, it wasn't the Thursday law of the week. It actually was, but price immediately reversed back to it. And in these markets, you can only call if you see an eye taken as the last thing, then you are not short that eye to go lower. Or you don't even trade this type of choppy candlesticks. But going back onto the DXY, we can see that we have the first half and second half. The first half very small, which coupled with the consolidation at the opening price of the weekly candlestick, and that indicated me that the price was going to be this on the second half was going to be this choppy, rangy candlestick. 1 second. So back into this, I just stopped for a few minutes and lost focus. I'm sorry, but you can see that first half we had the range and that range conditions that I mentioned. Price very slow, very choppy, followed then by a small 12-hour, a small first weekly half candlestick that indicated me that okay, price is going to hold this accumulation and it's meant to be the birth of an expansion. So I was like, okay, let me just wait for Wednesday 7, which is also Wednesday 5 on EU because there's those time difference. It's 2 hours. So the half of EU is always 5 because it's 5 opening, 5 close. And if you divide those, you get 5 p.m., 5 a.m., and back to 5 p.m. The difference is that on DXY, there's this gap where price opens at 17 and also closes at 17 on the weekly candlestick, but the daily candlesticks open at 19. So you can see that then after the Monday candlestick, which is our two, three 12-hour candlesticks, which is not normal. Then we have back into the 19, which is 7 p.m., 7 a.m., 7 p.m., 7 a.m., 7 p.m., 7 a.m., 7 p.m., and 7 a.m. So there's this kind of detail, if I may say so, on DXY. So yes, I was looking at this and okay, let me just wait for Wednesday 7 a.m. and see how NFP what NFP does, what FOMC does. I'm sorry. Then we had the FOMC candlestick trading lower. Everybody tried to bought this low. So oh my god, the DXY made this low. Let me buy this, and they bought. Price at higher created more liquidity, more equalize, and those equalize were like the birth of this Judah swing. And notice it, not just notice this, all these markets work. We made a big news event low where everybody wants to chase that money. It's quick money, if I may say so, right? If you buy here and buy, price is expanding a lot on it and on the FOMC, and they make a quick buck. If I'm yeah, a quick buck, that's the best way to call it. So notice it. Oh, they make quick buck. People who are shorting right here probably got scared and they closed position, or someone got lucky and didn't see this and they just hold it, and then we made the equalize. So we have buy side sell side liquidity with all of the buys on this FOMC low, and we have buy side liquidity on this equalize. Price does another tap on the buy side liquidity, creating even more equalize, even more buys above this, and everyone that buying here is either closing the position right here and selling. It's basically generating at this moment. We have buy side and sell side right here. These are the 2 points of liquidity. Notice how the buy side liquidity gets intact and price trades lower into the sell side liquidity pool. For smart money, with time involved, so weekly low on Friday, also with turtle soup, second half making the low, with also the first weekly half being a range, we as smart money are expecting price to deliver higher. But 90% of the marketplace is looking for price lowers because we had equalize, a breakout, and everyone on Friday is believing that price is going to continue and continue lower because this low on the on FOMC was broken, was indeed a breakout, and it wasn't a breakout. It was a reversal of the week. This was the low of the week at a time where if Friday makes a low of the week, and that is a range candlestick that we're expecting, and not a like not a trend candlestick for Friday to close and then do a and then the usual close, right? Where I imagine that this is Friday candlestick, right? Then Friday is here, and then it's not this second reversal of the week to close the weekly candlestick. This wasn't the close of the candlestick. This was the low, the first reversal of the candlestick. The this right here. Instead of being this, it was this high, which is this low right here. Then price expanded upside, making the high of the week. So for everyone here, for retail, they saw equalize, lower prices, breakout. For retail, we saw buy side liquidity not taken. We saw that the weekly low was made on Friday, which is more important than liquidity. Time is more important than liquidity. We have our bias, which is a monthly drawn, which is higher. So you want to be buying, you do not want to be selling, especially when we have this equalizer right here on DXY, especially on the second candlestick, on the second week, on second half weekly half candlestick, when the first weekly half candlestick was this small accumulation. So we had the turtle soup of the FOMC slash Wednesday low, and this is then followed by price expanding on the upside and making the entire range of the basically the entire candlestick. I will I will be now noting the Monday, Tuesday, Wednesday. Okay, it doesn't show. Let me go one time frame lower. So I will not deleting this box. Mm, Let me see if I can make it different. So we have the weekly box, we have the first weekly half, second weekly half, then I have the Monday candlestick. I have the Tuesday candlestick. 1 second. So sorry, but someone call me. But I'm now. I'm just going to maybe delete those two boxes. I have this trend line right here, which can be seen as the weekly half, and then I am right now just noting the Monday, Tuesday, Wednesday. Now on Wednesday, which was the NFP candlestick, we made this off day, followed by the Thursday candlestick, and then the Friday candlestick. So the entire weekly range was made from the Friday low to the Friday high. We can see that the first half of the candlestick, first weekly half, if I may say so, was this small range accumulation. On Wednesday, we traded lower, below the low of the week, and as you can see, between 3 and 11, and then by 11 and 19, which was FOMC for Wednesday, we have price immediately traded back into the weekly open. Thursday, we traded higher, creating this equalize, which was followed by a EU SMT, where on EU we traded above these, you know, these lows, and right here, okay, maybe I'm, yes, as you can see on Thursday, we have this weekly low, and on DXY the weekly high has been the Monday, which on EU it was turtle soup to make this turtle low, and in the XY was engineered equalize. I'm so sorry if I said that wrong. Then on Thursday we were back above the weekly open, which is then followed by the Friday back above the weekly open, and on the second half below. So notice creating this weekly low, which is the new second half weekly low, the daily low, which is Friday, and price reversed on the upside back into the weekly open, and then even higher into the equalize that were created. Mhm. These are now the 4-hour candlesticks, and on the 4-hour candlestick I can divide those as well into 2-hour ranges, not ranges, but 2-hour time periods. So instead of being an entire day, I can do the same thing and divide that entire day into two halves, and then I will have two smaller halves that create the entire daily candlestick. And we can see that we have the Monday, Tuesday, small candlestick followed by Wednesday. 1, 2, 3, 12 hours for 8, 12, for 8, 12, for 8. So this line is wrong. Yes, now it's correct. Then for 8, 12, then second half for 8, 12. What does this for 8, 12, so this halves say to you slash me? For me, there are a way to identify if the first half if the candlestick is going to be a trending candlestick or a range candlestick. So if I believe that the low of the day or the low of the, so let's say for Monday, the low of the day isn't in, so it isn't already, so the first reversal hasn't take place. So let's look at Monday on itself. We have 1, 2, 3, so we have this first daily half on Monday, which is then followed by the second half of Monday, 1, 2, 3, which makes the 12 hours, where we made the high of the day on second half, and we made also the low of the day on second half. And this is what like that range slash late reversal candlestick happens. Same thing on the, not same thing, but inversion of that late reversal is the early reversal on the first 12 hours of the day, on the first half of the day. And it happened on Wednesday, where we had price trade higher, make the Wednesday high of the day on not even the high of the day, because I was going to say that this was the high of the day at the 23 for our candlestick, but it wasn't because the low of the day was made on the second half and then back above to make the high of the day. But let's look at a classic trending candlestick. Thursday. We have the classic sell candlestick, which is the early slash reversal, the early reversal, which is can also be called a trending candlestick. So on the first half of the day, between 23 and 3, we had the price make the high of the day and then reverse lower and trade on the downside. Also on Friday the low of the day was made on the first daily off, and then it was followed by the second daily off expansion and followed by this reversal. That's the whole idea. On the 2 hour chart, you can see the same thing. Let me just extend those. And the same thing is pretty visible. Now just with more candlestick. And you can see that weekly open above the week. That's the premises. It's identifying how a candlestick is going to be it's going to shop you and it's going to hurt you. First, you need to understand what time it is. It's a Passover week between January closing and Friday opening. First red flag that it's not a perfect week. It's not like it's from 5 to 9. It's not. It's a breach between January and February, which was the first red flag. Second red flag was the news, where we had NFP on Friday, and we had also the FOMC. That is also coupled with the fact that in the first weekly half, price consolidated a lot and created a small range candlestick, which coming from this range as well. So there are a lot of aspects and points that you can use to deduct if a candlestick is going to be a range, be a trend, etc. If this was a ranging candlestick, then we'll see probably a Tuesday low of the week right here, and then price just expanding on the upside and not this not mess, but this high, now lower, now back higher, making equalize, now back lower, now the reversal on Friday. So the entire expansion of the week from weekly low to weekly high was delayed all the way into the second weekly half and into the second half. So if I divide this, and into the second half of the weekly half. So we have this second half, right, from here to here. This time period. Where is the tool? Where is the tool? I think it's here. Yeah. We have this time period right here, which are 30 bars. Then you have the 15 bars. It was one above it. And we have this 15 bars, which make the first half of the second weekly half. And then we can see that second weekly half. The second half of the weekly half was this Friday candlestick, which made the Friday low of the week and the high of the week. And it's basically the whole idea from this weekly candlestick, which shows the late reversal. A lot of shop, second half opening, immediately trades lower as a like a manipulation. Below weekly open, immediately trades back higher, back to the weekly open. Consolidation at the weekly open. Also, note that the weekly open is the same price level or very close to the same price level as the second half opening, weekly half opening, followed by one more Judas higher, back above an eye, back above weekly open, and back above the second weekly half open, back lower, below all of those tops coupled with liquidity and weekly lows at the time of the day and time of the week, where if this isn't weekly low, then where we can call this weekly low and price traded back higher into the weekly open and even higher into those equalized slash liquidity. So that's my whole idea for DXY. I don't know if I explained it well, but that's all it. And now I'll be going into EU with the same idea in my mind. I'll just be sipping on some water. So on EU, what can I see? I can see that price traded into the previous week 4 weekly open as a reversal, and the same idea is going to be seen on this week, where it may look as a trending candlestick where possibly Tuesday reversal at these highs, and we may actually believe that this is like if only looking at the weekly candlestick, we really may believe that, oh, it was a Tuesday reversal and then the price traded lower. No, it wasn't, because if you go onto the daily chart once again, we can see the entire daily range, and it wasn't a cool weekly range. Oh, and it wasn't like a very easy to trade. And the shop on EU was even more poppable, if I can say that word, poppable. Like it's very thin because on we consolidated a lot on Monday. On Tuesday, also consolidation and trading higher. This is followed then by this Wednesday trading to this CB that I mentioned. This is a CB that I was looking all throughout this week. And then after trading to the CB, many people thought that is not the weekly high, back lower, and then back higher, and then back lower once again. So is this idea that it's a seek and destroy condition, and you can't call tops and bottoms. You just have to trade the pattern, or you can just leave it out. Just see if a low was taken right here. We had this low taken on Thursday, a previous day low taken, and immediately trade higher into a high. So we can see that the Wednesday NFP candlestick acted as a range, where Thursday we traded to the Wednesday range low, followed by expansion higher. So this reversal, if I may say so. Then on Friday we traded to the Wednesday range high, and then price traded lower. All of this wasn't like hindsight. Oh, it's hindsight. I can see it now. Yes, I can see it now, but I also mentioned throughout the week that weekly open was a very weekly opening price was a very telling and a very poppable sensation. With experience that this week was going to be like that seek and destroy conditions that happens sometimes on the daily chart, on daily candlesticks. So on the 12-hour chart, I have the off noted, and we can see that we have the Monday candlestick, and that small detail that I mentioned on DXY, it does not happen on EU. EU has perfect opening and close, where for DXY it has those two 12 between like the 17 opening on Monday, then the Tuesday candlestick opens at 19. So there's the detail that I mentioned, where on EU it doesn't happen. On EU you can see that we have 20, 10, 10 candlestick, 10 preferred candlesticks. Sorry, 1, 2, 3. So 1, 2 Monday, 1, 2 Tuesday, 1, 2 Wednesday, which are 6, 7, 8 Thursday, 9, 10 Friday. So they are perfect candlesticks, 10 perfect candlesticks, where the XY has 11, as in one more to make that 2-hour gap, where then it opens at 7 p.m., 7 a.m., 7 p.m., and so on, so on. So this is the 12-hour candlestick. We can see that we had price reversal right here. So Friday making, I will say that Friday created the weekly range just to be like in sync with the XY, because Monday is going to open and continue lower, possibly into the monthly tranquility as well. But I don't want to call this Thursday low of the week, because this Thursday even so you can see that lower right here. It says that is Wednesday 31/1 of 2024. That's right here. That's incorrect, because the 17 12-hour candlestick opens the next candlestick, opens the Thursday candlestick. So this is Thursday. This 7/8 is Thursday. 9/10 it's then Friday. So you may say that it's Thursday 17, Thursday 5 p.m., but it isn't Thursday. It's like the Friday. It's making the Friday candlestick, right? It's making this Friday candlestick. So we had this eye of the week as the Friday eye of the day, also as the second half of the day, which is then followed by price trading back lower into this second half low, not able to take it. So Thursday low of the week and Friday eye of the week. On the 8-hour chart, you can see with a little bit more of detail those power of 3 candlesticks, which is not meant to be used as a pattern, but with logic. So we had the first 8 hours, so Monday, followed by Tuesday, back to weekly open, followed by Wednesday, above the weekly open, above an eye, making this second, on the second half, this eye of the week, which was then later turtle soup. But on Wednesday, we made this Wednesday after day on the second, also the second half, which could be seen as the second weekly half after day. Then the price immediately traded lower, trading below these equal lows, making a new low, so back below the weekly open, back below some lows at the second 8-hour candlestick, which is between 1 and 9, so 1 a.m. and 9 a.m. Then this is followed by price reversing on the upside, which then on Friday on the 1-hour candlestick again, so the 8-hour time period between 1 and 9, we traded higher into making a new eye of the week, a new eye of the second half above the weekly open, and then price immediately traded lower. On the 4-hour, I can now start dividing those candlesticks into again, so making dividing the days as well uh, on halves, so daily half and the weekly half. So the weekly is already here, and now I can divide those into halves. 1, 2, 3, first daily half. 1, 2, 3, second daily half. So as you can see, the time of the Wednesday daily half is the same as the weekly half. So at this point I don't need another trend line, but here I need it. So 1, 2, 3, making the Thursday low of the week and low of the day, followed by this reversal, back into the weekly open, back above an eye, and then it's followed by Friday. 1, 2, 3, eye of the day, and then we have the reversal of making the eye of the week. It's the same thing on 2-hour, where we fuck. I used the halves, like I mentioned on the DXY, as a telling if the candlestick is going to range or it's going to shop. As you can see, we had on Thursday a classic candlestick where we had an early reversal between 3 and 5, between the first daily half and the eye on the second daily half. Same thing on Friday. Friday eye of the day on the first weekly daily half, then low of the day on the second daily half. Same thing on this. So no, this on Wednesday it's actually incorrect, where we had the first half create this range, if I say so, and then on the second daily half we made high of the day, followed then by making the low of the day. So it's just a way of using uh, time. At what time is price going to make the low of the week? Of what time? It's a more important time, and that's why these concepts are hard for me to explain, because I don't have the experience on those. And it's hard for me to truly grasp because and explain to others. Time is a very difficult subject to explain. That's why a lot of ICT traders don't explain it or dive deep a lot in it, because it comes with an understanding and with experience on the marketplace. So I think that I have all of the entire weekly range explained, because it's just some a casual like DXY inversion with some small differences between the two, but it's pretty close, if I may say so. Yeah, so that's basically it. Just notice how the first weekly half low was below these ones, and then it was respected all the way until the second this I was made. Then this I was like a turtle soup, priced slightly lower. So notice that our turtle soups are also so uh, a take profit at a liquidity pool is also an entry position. What do I mean? So notice that we have right here this low, and this could be like a take profit from. I'll just use the. I don't use this for this, but let's just for the sake. So we have this position, right? Winning position, take profit. Notice that on the take profit was then a reversal point of interest back into the position, right? So I'm just going to hide everything from this. Hide. Yeah, okay, that's good. So just those highs and lows many times that we pick for our sell side and buy side pool are many times reversal point of interest or retracements. That's what happens at this low. Notice it? Oh, after the price reached our take profit, reached in this sell side pool, it immediately, not immediately, but it reversed in our way. So this weekly, first half weekly low, and then this first half weekly low was protected until this I was taken. So this I, fuck man. Oh my god, I'm going to punch my monitor. Just kidding. What am I doing? So you can see range low, back to range high. And then uh, this take profit right here could be also used as another position back into our stop loss. Right? That's what I'm trying to get at. That's the whole idea that I'm trying to explain. So back, take profit, and back right here. And then this take profit right here with this low was then followed by another reversal, which sent price back higher into this high. So that's another one. And then after this, we had another reversal back lower on downside, back into this low, which is now going to be 32. This is what I mean, but by ranges, where or by seek and destroy, where price is always going from highs and lows. So from this high to this low, from this low, this high, from this high back to this low, which was respected all the way to this high. Now this high was respected all the way to this low, and it was now turtle souped. And now this low that was respected and it was inception slash birth of this move on the upside was now viewed as a drawn liquidity. So drawn liquidity from here to here, drawn liquidity, this as a inception. So inception, drawn liquidity. Now inception, drawn liquidity. Now inception, right here, drawn liquidity. Now this drawn liquidity is now an inception to the drawn liquidity. And now this now this drawn liquidity is now an inception to this drawn liquidity. And now this drawn liquidity is again going to be an inception for another move. So this is what ranges do. They are just uh, reversal points. Like there are drawn liquidities, and then they become inceptions slash a birth of an expansion. I think I explained a lot. I don't think that this lesson is the most organized that I made. It was really bad because my computer kept crashing and crashing all day. So yeah, I'm a little bit annoyed. But it is what it is, and I don't think that anyone is going to listen this until those 45 minutes. So yeah, they just like close after like 2 minutes of me talking because they don't care about this. I'm just doing this for me, and so I can better my English and my talking because I'll talk really fast, and sometimes I don't say the words that I want to say, and yeah, that's it. I'm not going to talk more.